Gold is shining brighter than ever. The yellow metal has smashed through all previous records. In India, it crossed the historic 1 lakh rupee mark for 10 grams. This is a stunning development. Globally, gold is trading above $3,500 per ounce. This represents a near one-third jump since the start of 2025. Investors are clearly taking notice. The question is, why now? There are several factors driving this gold rush. One major catalyst is the wave of uncertainty sweeping global markets. President Trump's recent actions have sent shockwaves through the financial world. His public criticism and threats to remove Federal Reserve Chair Jerome Powell have raised eyebrows. Trump's tariff policies have also injected volatility into the markets. These actions have shaken confidence in the U.S. economy. Investors are worried about inflation and the potential for a recession. When uncertainty rises, investors seek safety. And gold has always been considered a safe haven asset. It's a tangible asset with intrinsic value. This makes it attractive during times of economic turmoil. As investors flee riskier assets, they are pouring money into gold. This surge in demand is pushing prices higher and higher. The momentum is undeniable. But is this a bubble ready to burst? Or is this the beginning of a sustained bull market for gold? President Trump's unorthodox approach to economic policy has been a source of both praise and criticism. His supporters point to the strong U.S. economy during his first term. His detractors argue that his policies are unsustainable and create long-term risks. One thing is certain. Trump's actions have consequences for the global economy. His recent attacks on the Federal Reserve have rattled markets. The Fed is responsible for setting interest rates, which have a major impact on economic growth. By publicly pressuring the Fed to lower rates, Trump is injecting political uncertainty into monetary policy. This undermines the Fed's independence and creates doubt about its decision-making process. Trump's trade wars are another source of instability. His tariffs on goods from China and other countries have disrupted global supply chains and increased costs for businesses and consumers. The threat of further tariffs keeps businesses on edge, making it difficult to plan for the future. This uncertainty is weighing on economic growth and fueling the demand for safe haven assets like gold. The US dollar has weakened significantly in recent months, reaching a 3-year low. This is partly due to the Fed's dovish stance on interest rates, which makes the dollar less attractive to foreign investors. A weaker dollar makes gold cheaper for buyers using other currencies, further boosting demand. The combination of Trump's policies, a weakening dollar, and global uncertainty is creating the perfect storm for gold. The rush to gold is not limited to individual investors. Central banks around the world are also increasing their gold reserves. Countries like China and Russia are looking to diversify their holdings away from the US dollar. Gold provides a hedge against currency fluctuations and geopolitical risks. This institutional demand is adding further fuel to the gold rally. The escalating tensions between Russia and Ukraine have also contributed to the flight to safety. The conflict has raised the specter of a wider war in Europe. Investors are concerned about the economic fallout from the conflict, including higher energy prices and disruptions to trade. Gold is seen as a safe haven asset that can preserve wealth during times of war and political instability. The global economic outlook is also uncertain. The International Monetary Fund recently downgraded its growth forecasts for 2025 and 2026, citing trade tensions, geopolitical risks, and slowing productivity growth. The IMF warned that the global economy is at a delicate juncture and that risks are tilted to the downside. This gloomy outlook is prompting investors to seek shelter in safe haven assets like gold. Wall Street, however, has not fared well during this period. Major stock market indexes plummeted by nearly 2.4% on April 21, 2025. This further illustrates the flight to safety. Investors are selling out of risky assets like stocks and bonds and moving into the perceived safety of gold. This divergence between gold and the stock market is a clear sign of the fear and uncertainty gripping the markets. The recent surge in gold prices has many investors wondering whether they should jump on the bandwagon. Is now the time to buy gold, or is this a bubble waiting to burst? The answer, as always, depends on your individual circumstances and risk tolerance. Gold is often touted as a hedge against inflation. When inflation rises, the purchasing power of fiat currencies like the US dollar erodes. Gold, on the other hand, is a tangible asset with intrinsic value. Its price tends to rise along with inflation, preserving the purchasing power of your savings. However, gold is not a guaranteed investment. Its price can be volatile, and there are no guarantees that it will continue to rise in the future. Before investing in gold, it's important to consider your investment goals and time horizon. Gold is a long-term investment. It is not a get-rich-quick scheme. If you're looking for short-term gains, gold is probably not the right investment for you. However, if you're looking for a way to preserve your wealth over the long term and hedge against inflation and uncertainty, gold can be a valuable addition to your portfolio. It is important to remember that gold does not generate income like stocks or bonds. Its value is derived solely from its price appreciation. Therefore, you must be comfortable with the fact that your investment may not generate any cash flow until you sell it. Before making any investment decisions, it's always wise to consult with a qualified financial advisor. They can help you assess your risk tolerance, understand the intricacies of the gold market, and determine if investing in gold aligns with your overall financial goals.